Let me know whenever we're up and running. Be sorry, man. Don't be sorry at all. Like I said, I'll try to summarize it as well as I can and still keep at the main points what I was trying to go over. Just let me know when you've started the YouTube stream. It's good to go. All right.
Did
Yeah.
you stop streaming in 60, Larry? No, don't stream in 60 frames, just 30. Oh, okay. Well, you were on Larry was. What? No, it was streaming YouTube 60. Give a link.
Other than this, let's just make sure people can hear me and see me at least. Are we good to go? Are we live? Hopefully this fixed it.
Larry, what are your streaming settings?
I'm doing the 30 right now. I'm doing a 30.
Are you on 10,000 kilobit?
Let's take a look.
Yeah,
Oh,
by
just
the
did.
way, your
You.
audio is streaming on YouTube as well. The conversation in this chat.
Okay, so it's working. It's good.
I'm just hearing an echo of it from us. It's a delayed echo on the YouTube.
Yeah, because you're hearing it. That's okay. Let's just move forward. I mean, as long as we're here right now, as long as we're good to go, it's not a big deal. I'm gonna go ahead and start. All right. Well, I'm gonna go ahead and move forward, guys. I'm really sorry about that, but I'm gonna go back over what I was saying earlier to kind of. I'm being told by some people it is working here, so yeah, I'm so sorry about that, but I'm definitely gonna go back and reiterate some of the points I was making earlier, just to make sense of these counts and why I have these counts essentially. And once again, I do apologize for that, and I appreciate you guys' patience too. And I'm definitely willing to spend a little more time here and even answer some more questions at the end if anybody does have more questions for me. So essentially, right now, this is my main primary counts. The reason why I'm keeping this count essentially is because, like I was saying earlier, we want to keep things as simple as possible in terms of Elliott waves. So, what I mean simple as possible is that right now we have a A wave into a B wave down for a C wave. We could label this different ways and I'll show you the alternate counts we have. But essentially in terms of corrections, whether it's a 2 or a 4, whatever kind of correction it is, a 2 or 4, you want to always try to keep it as simple as possible first. Because if it starts to get convoluted and it starts to add on top of it and starts to do more corrections on top of it, you're kind of stuck in a Elliott wave corner if you've already labeled this a W, X, Y essentially. Now, it's not the end of everything, but in terms of counting higher time frame corrections, you always definitely want to try to keep things as simple as possible, essentially. So, this is still a valid count. The only thing that is concerning about this count is this entire leg right here, essentially. This one, right here. Now, it is smaller in length than this one. There's no doubt about that. But essentially, it's broken the structure of its whole entire leg. So right here, if the correction did end right here, it's still smaller than this one. If the correction is still happening, which we'll go over later, it's broken the time constraints of this leg. But essentially, not only has it broken almost broken this one, or it will, but it's broken the symmetry of this leg right here. So when you look at the symmetry of each legs, they all the corrections within the legs, they're all consistent within that price time symmetry. They all have the same time price symmetry within that A leg or the B leg or the C leg. When you look at this entire leg right here, and you look at all the corrections that are inside this leg essentially, whether they're minutes, minors, minuets, what have you not, they're all contained within this entire leg. This leg, you could say the same thing about this one. Same thing. These corrections, they are all just contained within this leg right here. But once you get to this point, it's getting a little extended in terms of time. It's not impossible. There are invalid counts, but there is no right or wrong count. There's only valid counts in terms of Elliott waves. So this is still a valid count if we were looking at this as an extension, essentially. So if we were looking at this as an extension, we have a 1, 2, and then a 1, 2, 3, 4, 3, 4, to a 5. That's the gist of this. But essentially, this wave 4 is getting a little too extended in time. Like I said, it's not impossible, but it may not be the most probable counts. However, if we even look at all alternative counts, we do have some reasoning and rationalizations that we could still be going up because once again, if we bring in time price symmetry, this X in this Y leg up this minor 4 is just very short in comparison to this W. It just doesn't really make sense in terms of time price symmetry. Like when we look at this one, well, I don't think I can. In terms of this one, the WXY, it had beautiful time price symmetry right here. WXY. Now that X was a little extended, but when you look at the Y and the W, they complement each other. They tend toward parity very well. When one of these corrections are very extended, the other ones will tend toward parity, and it's usually always the B and the X wave. They always tend to extend in time. But when you look at the W and the Y, they're very similar in terms of strength, time, length, what have you not. And same with this one here. Same with this correction. If you look at it, like we've got a nice motive wave, nice push up, nice ABC. We have a long correction, long X, long correction of X. Then we look at the Y leg, a nice push up again. Again, it was the same time, maybe not in terms of strength, but in time. Look how much in terms of parity it was in time. So usually when we see corrections, we kind of want to see that that time price symmetry. We could take it a little minor step down. We're looking at complex corrections. Now we can look at simple ones, just ABCs. Here's another example how the B leg is just a little bit longer than the A and the C. but the A and the C will tend towards parity. And even in this one right here, I mean, it is a quick B, but the C and the A tend toward parity in here, and you see that a lot with C and A legs. They complement each other, or the more simple it is, the more complex the C leg will be, and vice versa. But the main gist of the point here is that we're seeing beautiful time price symmetry in all of these complex corrections instead of this one. Now, we have an alternative and a variation, but in our alternative and in the main, we have directional confluence essentially because we are going to see we are expecting a bounce here. Now, how high of a bounce we'll see, eh, I don't know. I don't think it'll be that high, but that's now my bias coming in, and we try to leave bias out of our analysis here. But essentially, we're looking for a bounce up. If we do stop in pretty much this area, I really am looking for this area for tons of reasons. We've got a lot of confluence here. We've got a lot of targets here we can take a look at and reasons why. But if we do extend higher, we're going to look at the alternative. And this one, in terms of time price symmetry and explaining the disconnect from this leg right here, it explains it beautifully, in my opinion. So, like I said, this whole structure right here has been disconnected from this one because of how long it's exceeded in time. It just doesn't seem, like I said, most probable that it is part of a four into a five of a C, but it's not impossible. But this one would explain the disconnect, and it also explain looking at this in a foresight kind of way, or yeah, foresight, why the time price symmetry would make sense more because we've got a beautiful, well, almost beautiful ABC. This B leg, this running flat right here is very gnarly. We've got a ABC into zigzag, A, B, C into expanded flat, and then depending upon how high this bounce goes, we either in this alternate counts or in our main counts. And when it comes to directional confluence with main and alternative counts, what I mean by directional confluence is that sometimes we can either be in an A or a 1, or sometimes we can be in a B or 2, you know, or in this case, potentially an X, you know. In all these cases, what do we expect afterwards? We essentially expect an extension, an expansion of these after these corrections. So after this A or a 1 or A or a B or 2, we're going to be expecting either a 3 or a C or even a Y. So we've got a lot of just directional confluence on all of our counts here, and even just on the subway structure. We've got a clean 1, 2, 3, 4, 5. It looks like right here. When you go to the higher time frames, it's not that clean, but in the 4 hour, it is still clean. And we are getting a little bit of divergence here too that we're seeing. So we've got, got a lower low being formed right here, higher high on the RSI. It's not as correlated with the money flow, but it's exaggerated divergence at least. But the main thing here is that it's following the relative strength right here. So you could argue divergence right there, but main thing is that we got directional confluence on multiple counts here. The main thing here is how high will this go, right? We want that bounce. We want at least a good bounce, but we don't want it to bounce higher personally. I mean, well, my bias is saying that, but in terms of counting, it can go as high as it wants. Price market can do whatever it wants. But in terms of complex corrections, we're going to expect some type of alteration too. So we've got a zigzag, expanded flat, and if we're expecting alteration, we're going to want probably a triangle per se. It's not likely that we'll get another flat because we really don't have the same corrections back to back. Like I was saying earlier, sometimes you can exclude that X wave when it comes in terms of corrections when we're looking at alteration, but really, when it comes in terms of higher time frame complex combos, we wouldn't expect the same simple correction right after another one. So in terms of alteration, I would really expect a triangle here potentially, which we could definitely see a triangle depending on how high it'll bounce. We don't know. It doesn't have to bounce that high, but in terms of alteration, this is what I'd want to see essentially is a triangle right here. Or if we're seeing no alteration, we're going to want to see a zigzag right here. So we'll have zigzag and zigzag, no alteration at all. Because like I said, normally when we look in terms of alteration in complex corrections, we exclude this X wave really. We're really looking for alteration within the motive waves, the W and the Y. So this is our rationalization, and it explains and it shows beautiful time price symmetry. They're all very just spread out beautifully, like potentially, right? We don't know if this will come a high. If it does come as high as it will, or if it does, it's separated out beautifully in terms of time price symmetry. Now, in terms of the large account, it's basically going to fit all alternative right here, which this is was my main before I had this main. But like I said, I usually try to keep things as simple as possible. And even right here, it's iffy because we've got a W. We've got a W right here into another W X Y. We usually don't like having a combo within a combo, essentially. There is a lot of debate around it, but in terms of rules per se, it's kind of it's there's a lot of it's kind of nuanced. It's hard to explain. But however, this is still a valid count, is what I'm trying to get at, no matter what. This is still a valid count. It's still A, B, C. And to be honest, this one kind of explains price action a little bit more, and up until you get to this point right here. Stay leg is a little iffy for sure. But the reason why we have this count is because it explains the disparity of this leg, the disconnect that this leg has from this leg. If you look at this correction, this X, it looks pretty disconnected from this leg right here. Now, the only thing I don't like about this is we've got a WXYX into a Z. We should really try to avoid doing WXYXZs on higher time frames, you know? You really can't even when it comes to complex corrections like a WXY, you can't label a WXY until it's over. It's not over till it's over. And there's a saying even with extensions, it's not over till the fifth of the fifth of the fifth of the fifth. Sometimes it's not over till you get all those fifths. However, this explains the disconnect from this leg. And I kind of like this idea. I really do. I think it would explain another push down and it would explain us breaching this high and it would explain all these disconnects and time price symmetry. So it would explain a lot. But like I said, I don't like and we shouldn't really try to label WXYXZs on higher time frames. But it's a valid count. That's the main thing. It's not invalid. The only thing I wouldn't want to see is it breach this low. It's not impossible. But what I mean by WXYXZ right now is a triple zigzag. This does look like a really good triple zigzag. There's differences between um, WXYXZs. They can be combos or they can all be zigzags. So it can be kind of like this, where it's a triple zigzag, where we got price is pushing it further up, pushing it down, correcting back, pushing it further up, then correcting it down, and then pushing it further up, essentially. Or we sometimes have triple combinations where they can be really anything, to be honest. I mean, it could be zigzag or flat into an X, zigzag or flat into an X, a zigzag or a flat or a triangle into Z. So there's different types of WXYXZs. So it's not impossible for it to breach this right here. But if I'm looking for a triple zigzag, which the point of triple zigzag is to continue to push price lower. And if you look at this structure, it looks like it's doing a nice correction, building a nice base before it does push price lower. That's the point of the zigzag here, is to build a nice base before it pushes price lower. We don't really want to see it go above this 382, to be honest. We can go to the point 0.5, but I think it might be stretching it. Let me see. Oof, right under that peak. I wouldn't call it invalid, but be iffy. But I really wouldn't want to see it breach this low right here, essentially. So that's the main reason for the alternative count here is it explains the disparity of this correction with its prior leg. And then we also have the just a variation. There is a variation where we're looking at a WXY. Like I said, this actually, like I said, when I was speaking about earlier, the ABC, like WXY, it makes more sense. And this was the one I was referring to because in terms of just explaining price action a little more cleanly, this looks like on the higher time frames, like this looks like a clear three-wave move. This looks like a clear three-wave move. Don't get me wrong, this is a beautiful five-wave move, but it could be the beginning of just an A into a B down for a C, you know? This is all on the basis that we ended the correction right here, just like on our main counts, because on our main count, we also have the 4 right here. So we have potential direction and confluence right here. We got a B and a 4. Afterwards, we're expecting either a 5 or a C. But like I said, the timing, like the time and the length of these X and Y legs is not really consistent with the whole structure itself. It's not impossible, but and like I said, this is just a variation. The reason why it's not an alternative is because it arrives at the same conclusion as the main counts, right? It's got the same pivots. It arrives at the same conclusion. It's just a variation, but it explains price action a little bit more better. So there's no right or wrong counts, right? That's the main point here. There's no right or wrong counts. It's which one's more probable in a sense, you know. So let's look at the lower time frames. I kind of want to break it down to the lower time frames. Check it out here. So we got our one, two, three into the four. Now it's debatable if this is over or not. This structure was pretty hard to count in terms of Elliott waves, and I did had to kind of break a rule here per se, but it did happen in the X wave, which normally do happen in X and B waves. Like I said, when we have combos within a combo. However, looking at the higher time frame swings and the medium term frame swings, this is still valid here, and it's been validated after we breached this low. So there are a few different ways I've tried to count it. You can even try to count this as a running or a regular flat with a ending diagonal. However, this diagonal isn't technically valid per se because of the measurements of the motive waves within it, but it does kind of explain price action a little bit more than this one when we have it going into a zigzag, into a complex X, into a zigzag for Y. Like I said, combos within combos, we really want to try to avoid those until it's almost after the fact. So, in a sense, I probably really want to stick to this one, but I can't just because this diagonal. But it's the same, it arrives at the same conclusion. So, regardless, we're into four. We're looking for a fifth of a fifth right now. We've got our one into two. This was a expanded flat right here for two. Now we're waterfalling down here potentially for either this could have been a barrier triangle. It's not invalid, and the reason why it's not invalid is because it hasn't gone past this C leg. It has broken the trend line of the A and the C essentially, but it hasn't gone past the origin of D and the termination of C, which it's technically still valid. Just depends on the structure we're forming now. If this is what we're looking for, essentially, if we're looking at this as a running triangle, we think this is a barrier. I mean, wow. I mean, I guess you would have to call this a barrier running triangle, essentially. If we were looking for this as the end, we want to see this as like a one, two, three, four, five, or if you look at it this way, once again, I try to avoid these if I can, and you can't really tell until either internal market structure is broken or you get a change of character or a major or minor pivot has broken. Major pivot would be these ones right here and this one right here. Internal market structure would be breaking any of these pivots right here essentially, but this could be a expanded flat forming right now. But like I said, we've got a WXY within a a B essentially. Like it's not impossible to have a combo within its actual correction. So this one is slightly more probable, and it's not as aggressive of having a combo within a combo, because this is just a combo within the B wave, which it does happen. But this is what I can see right here if we were looking alternatively. And it does look like this is forming more of a three-wave structure at this point, right? Depends. If this starts to accelerate down, we'll see a little bit differently. But if we see it kind of just do a three-way move and bounce like this, and then start moving up, we're probably going to look for the structure to end up here essentially, you know? So I don't think we're done yet. I think we still have one minor push down, but when is it coming, right? Is it going to come pretty much today for the end of the weekly close, or are we going to go up and then come down? Just depends on this leg forming right here. Personally, I really do see that. We want to see it probably bounce off the golden fib or the 786. Last ditch effort's always the 886 and 854. We really don't want to see that. I don't think we really have anything here to hold price either. It's just brand new recent price action. We do have targets right above and right below. However, right now, I could actually see this playing out a little bit more just based off of this structure being formed right now. Like I said, if I start seeing some good acceleration, I'm going to be looking for that long here because I'm still kind of waiting for that long. Because truthfully, if we look at it in a opposite way, I can't make this a clean one or impulse off of lows. This whole structure doesn't look clean at all. This does not look very impulsive at all. It's 100% corrective. So even if we try to even try to get our well, we might even get our three to end here, three here, but it'd be very difficult. But getting the actual five to end here, I mean, I don't know. It doesn't look like uh, an impulse for a five structure. I don't think I would see it. I've tried to count it any other way, but for a short term price action, this is what I see. I'm a little more lenient. I think I want to see this one more, but I could definitely see us pushing down just for the weekly close because we're about to have a weekly close and weekly open. So I could definitely see that. But those are the arguments and the reasons, and that's the update for recent price action essentially. We could go over the S&P and Ethereum, and they're actually kind of very similar right now. I mean, Ethereum's definitely in a similar spot. So I don't want to spend too much time on Ethereum or the S&P. S&P is in a different place actually. We might be able to highlight some points on the S&P here, but in Ethereum, I mean, we're looking at the same thing essentially. So, we've got our one into a two, down for a 3, and for a 4, down for a 5. And then same thing. We're working on our 1, 2, down for 3, potentially a 4 into a 5. We're waiting for this fifth to end right here. And this one looks a little bit cleaner than a Bitcoin. And sometimes it does, and sometimes it doesn't, right? I mean, sometimes they have parity, and sometimes they don't. Sometimes it's leading, sometimes it's cleaner. But in terms of like this price action up here, it wasn't very clean. Essentially, like it was just. I think it kind of duped me out a little bit, you know. But in some legs, in some spaces, Ethereum is very clean in a sense in terms of her moves, and this does look like a good running bearing triangle, a mix between the two, a barrier and a running. So this might be helpful for us in determining if Bitcoin's impulsing down or not. You know, if we start to see some rejection here, it starts to look impulsive to the downside, and we look at Bitcoin and it starts to starts to accelerate more. Like I said, on Bitcoin, we have it kind of right here at this point right here. It could just come back down for that too, and then pivot up. But if it starts to accelerate more downwards, start to extend this A leg and extends past that 886 that we have right there, we'll probably look towards the final push coming right during the Asia close or Asia open or Asia opening here. You know, we'll see Asia mess with price. This is what I want to see personally. I really do. But in terms of Ethereum, same boat as Bitcoin essentially. I mean, we do have a bullish count actually. We could go over that bullish count, but in terms of WXY, I mean, we do have A into B into C. So we have a leading diagonal A, running flats B, and then a impulse C, zigzag X, zigzag C into Y. If we were looking at this bullishly, I mean, it's either a 1 or a A. So this could either be 1, 2, 3, 4 into a 5 for either a 1 or A. And we're about to complete the A or a 1. Like I said, we're either in a 1 or an A right now. You know, we've got a 1 that we potentially want to see right here. This is what we're saying about directional confluence, you know, on alternative counts. A 1 or an A, a 2 or a B, a 3 or a C. It really just depends on how high of this bounce we get, you know? Just like on Bitcoin, if we go higher, we're going to see that Y wave. But we have some good directional confluence here, even on Ethereum. We got either a or a 1 down. We're about to have a bounce up for an A or B. And even if it does exceed this high on Bitcoin and Ethereum, you're still going to have safe, easy trades here, I believe personally, because we're going to expect an impulse right here, you know? That's either going to be an A or a 1. No matter how high it goes, you know? No matter how high it goes, it's going to be either an A or a 1 that we're going to be expecting here. We're going to be looking for an A. And depending how low the bounce goes, you could gauge this bounce too. So once you see this impulse form down, this impulse and then a correction, you're going to want to try to take this trade down and then look for this long back up. Because what do we expect after an A or 1 and a B or 2? We're going to expect either a C or a 3 essentially, you know? The, the issue here is just not being greedy once you get to these zones right here, you know? Because like I said, We could be pushing up for a Y here. Even on Ethereum, this could just be a simple C that we're pushing up for. Or, on the main count, we could not go that high. We could really only go to just this price action up here. So it's important to be not greedy. You can even set trailing stop losses if you wanted to, or at least put your entry to your stop loss after take profit one or take profit two. But especially when we get to this zone, I'm not going to be greedy at all. I'm going to be pretty not on the sidelines, but I'm going to be diligent with my trading. I'm going to be managing my risk really well and not being greedy with it, because this is going to be a crucial pivot for just even crypto and the indices. And just Dow, the Russell, S and P. S&P is a little bit hard to read right now. Can't really tell if can't tell because on the S&P, this is getting really extended. You might be able to fit a one, two, three, four, five. I just don't think I can really. It really looks like a one, two, three, four, five. It does. So this could be an A. Then we bounce up for a B, come down for a C. But man, this is such a deep looking four as it is. But when you actually pull it on Fib, it's not getting that deep now. But once again, we're only at the A. This is only the potential A leg. If we do bounce out for a B, we're going to expect a C leg. Might even want to even plan for a short or truncated C or a weak C, given the strength of this A leg. Sometimes when you see that, I don't like to plan for truncations, but we can at least plan for a weak, a weak leg. So this could be the start of an A or a one, just like on Bitcoin and Ethereum. We've got a one, two, three, four, five. Is this a one or is this an A? Depending how high we bounce, is this going to be a two or B potentially, or are we actually going to continue and complete our structure that we're looking for? I'm not sure if I could really get this to end like this. I mean, it's definitely possible, but given the magnitude of two, I just don't think it's possible that wave four be so short and so shallow. It's not impossible. That's the thing. There's no that wouldn't be an invalid count. It would still be valid. But what's more probable, right? We're trying to think of things in more terms of what explains price action more cleanly, clear, and what's more probable in terms of the overall structure, the internal structure, the price action right now. So I would either take a look at this, and like I said, I'm getting a little iffy on this because not only have I was expecting a nice bounce off of this, I really would have want to see a bounce off of this channel we have here and continue up for a one. But the news, the news, it sometimes it really does play a part with the market, especially when it comes to economic news like the Fed. When it comes to like corporation news and earnings and reports and defamations and libel and slander and just news and positive negative news regarding that asset individually, that's a different story. But when it's coming from the man, the myth, the legend, the Powell, there's some strength behind his words. And even right here, we had the CPI news, it just boosted price up. We had a nice little boost. And when we heard that PCE, it just wrecked price. We're expecting some type of tomfoolery to come around here with this meeting that's going to happen here in September. But the gist of it is, right now, I'm seeing this being a little too extended for a four. So if we were to look for another leg down, which it's kind of hard right now because this is the argument we were making on Bitcoin essentially, is when you look for WXYXZs, you do not want to see that X, the second X, exceed the low the termination of that W wave. If it does, it's not like it's an invalid count. Like I said, it's just not a triple zigzag at this time. That's the only thing. So it could be still valid in terms of a triple correction, but in terms of a triple zigzag, I just don't see it really because in terms of, I mean, like I said, the reasons for triple zigzag is to continue to push price lower. You wouldn't see go past that point right here like it did right here essentially. You just don't really see that. So it's not impossible, but now we would look for some type of any correction to form here. It could be a zigzag, it could be a flat, it could be a triangle. We really want to see a zigzag because the whole point of triple corrections is ideally to keep pushing price lower. Zigzag is is a more sharper correction. It wants to just continuously batter price and get it lower quicker. But triple X corrections, they achieve the same outcome and they have the same purpose is to push price lower no matter what. So the only downside to this is, like I said, we're projecting a WXYXZ on a higher time frame, and we really should try to avoid doing that. But the only other thing we can do is think bullishly. We could get the structure to end very easily. Same with Bitcoin. I can get Bitcoin to end very easily, but this one's a different story. Bitcoin's obviously different because of how corrective it looks, but you could definitely look at this as being a new leg up. We could even say this is a potential 1, 2, 1, 2. If you want to get crazy here, it's not that's not invalid at all. I could totally see that happening. I could totally see what I actually wanted to see is see us bounce off of this zone, come up here, and then correct down quickly, sharp two for this FOMC meeting. Probably have Papa Powell put out some really good positive news potentially, or at least the market take it bullishly and impulse us out of there. That's what I'd want to see for a bullish count. And if we were super bullish, like I said, this could be a 1, 2, and another 1, 2. Now it is a little um, disparity in terms of strength, but in terms of length, not so much really. I mean, they're almost going to be parallel in terms of length. I mean, timing, like the actual timing of the structures. But this is where things get iffy again. Like I said, you've really got to get this to end somewhat if you can. Either a 1, 2, 3, 4, 5, B, C, W, X, Y, X, Z. I don't see that. But the point of the matter is here is if you were looking bullish, you want to try to get this structure to the end relatively quickly. But if not, you know, I if I don't see it end quickly, I don't think this would be a 1, 2, 1, 2. I'd still lean towards where's our bullish count? Here it is. I still lean towards this potentially. And if all else fails, if this came below, but it pivoted right off the golden fib or the 786 and came right back up, we would have to we'd have to move our 3 that we have over here and move our 4 that we're looking for up here and move our 5 that we're looking for up here essentially because it can come deep. This actually makes a little more sense here. Is this would be a 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5. You know, nice A, B, C. We'd have a really weak 4. Like I said, it's not impossible. May not be most probable right now, at least, but not it's not invalid. If we were looking bullish, like I said, we do want to see that 1, 2, 1, 2, or even just a potential 1, 2, 3, week 4 into 5. That's what I'd want to see. This does look like a 1, 2, 3, 4, 5. We're gonna expect a bounce, a three-way bounce afterwards, and if we get continuation, that's what I'm gonna look for right there. So these bounces right here on Bitcoin, Ethereum, Nasdaq to Dow, this bounce right here is gonna be so important if we breach this high or not. On Bitcoin, Ethereum, you name it, it's gonna be very important of continuing the sentiment that has been building right before it, nor breaking that sentiment and creating some fear. Because it's not impossible to do that, right? But more chances we go down lower and break the structure too, it's just more unlikely that we keep that bullish market structure and that bullish sentiment. Especially if we get a some bad news here in this time zone with the FOMC meeting. I don't like to place too much weight on, like, said, on news, but when it comes to economic news and especially the economic factors of what's going on right now, I think we should be very listening to the numbers, where it's coming out, and what Papa Powell is talking about. But I think I've gone through the reasons for my accounts and the whys, and we can go over, price targets and validations and validations. But I actually want to try to take some questions. I feel like I have been talking for a good while. So if anybody has any questions, and Cypher, I'll actually have you, if you can, I know it might be some work, but if you could actually just copy and paste them and send to me so I can see it because I don't have that screen pulled up. But if anybody has any questions, please start asking away. I'm happy to take some questions right now if anybody does have some. Let me see. So A, B, C. That's what we're looking for right here. Where did you grab the BTC fractal and why? Yeah, that fractal is mainly just for visualization purposes to, like, just get my point across on the bounce. So the fractal itself, it was grabbed from, where's it grabbed from? Right here. It was just to illustrate the point, like, of the price action. Like, I'm expecting a good bounce after we complete this impulse down that we're in right now. So this is where I grabbed the fractal from, but it was just really to illustrate the purpose of what I'm expecting, the type of bounce I'm expecting, like a nice clean structure of a zigzag, because I am expecting a zigzag overall, you know. It's just depending on how high that bounce is going to come, right? If it comes higher and breaches the 25 2 right here, we're going to look for alternative. If it starts to look, very choppy looking, like three up, three down, three up, we're going to look for that triangle. But in terms of probability, it's more probable we are going to see a zigzag because of directional confluence and in terms of alteration. Because we have alteration on our side, and just in terms of alteration, because our directional confluence for our wave counts. Because on some of our wave counts, we've got a one right here, or this could be an A. So afterwards, we're expecting a B. And most notably, zigzags are the most common corrections out of all of them. So we've got even more to favor on our side of expecting a zigzag here. Yeah, but in terms of, like, actual thought process of grabbing that fractal, it was mainly just to illustrate a point of what I'm expecting price to do. Your counts seem to have all some kind of leg up from here soon. Is there a chance we just go down from here? Yes, there is. So if we're looking super bearish, try to find myself somewhere in the middle, right? Kind of like a Goldilocks zone. Not too hot, not too cold, just right. Not too bearish, not too bullish, just right. But yeah, there's very much so. But I would still have to see a leg up. It had to be a really quick leg up. So what I mean by that is, I guess I could illustrate it without. What I mean by that is either this could actually just be a one into a two. We could really even just start beginning our three into a four and a five. So that's kind of thinking super bearish, you know. Let's even see where did it go to. It'd have to at least hit the 0.236, and it's not uncommon for wave two to do that. But even I don't even have a 236 on it because it just, like I said, it just doesn't happen. It's not uncommon. It's not impossible. I mean, it did probably hit the 272 as well, almost. But that's the only thing that I can see here is if this was actually a one into a two, and we're impulsing down for a three, and we're going to see some gnarly acceleration here. Well, we are very close to some liquidity here, you know, and it has back tested it really. I mean, it's back tested it twice essentially. If you look at it, you know, from an ICT perspective, like a liquidity matrix, you know, like we're more on the discount side right now. So you expect, you know, sentiment and price to want to maybe grab these targets here. So in terms of expecting price to go down in terms of LA wave counts, not necessarily. It's not on my. It's not the most probable that I have here going, but it's not invalid. It's not impossible. But the most probable, I don't see it as this being a one or two. That's the only way I could see it really pushing down further at this point from an LA wave perspective, though. Let's see. The scalp pull on Bitcoin hit the 832 dead. Is that you, random? Would you expect that low to be taken out? I would think losing the 832 is pretty bearish. Yeah, you know, losing. I mean, I don't use the 832 that often. I know it is used very often, but yeah, I mean, in general terms, when we're thinking of the 832, the 854, the 886, those are like last line of defense, right? Like the very last line of defense. Like you think about 300, the Spartans are all lined up in the rows. That's your last line of defense right there. Is that 886. The first line is that 832 essentially. But yeah, if they lose those zones, we will be expecting a push down. But that's the thing too. When you're in corrections, you kind of. This is why I like having my take profit two or three as the 113 or the 1236, because just because we break the 886 or the 832, it doesn't mean it's ripping like it's gonna go. I mean, from a scalper's perspective, maybe differently, but from a longer high time perspective, we're not gonna expect a rip because there's always a chance it could just be in a flat. So right here, this whole leg, even right here, you could even point right here. We lost 886 and it kept pushing up, but that doesn't mean we're going to continue to push you up. And same thing on a lower time frame. Just because we keep pushing down, doesn't mean we're going to continue to push down. We can't think about it in terms of that way, but in terms of like interpretation, like as another as another way to analyze what's going on potentially as another factor. Yeah, losing 886 is definitely is bearish, or 832. But even then, I really look for losing the 1236 or 1272 overall in the high in like in hindsight on the higher time frames, because when we're in a correction, most important thing to know is when you're in a correction, whether it's a B or a 4 or an X or what have you not, and it's a combo, even if it's not a combo, you don't know it's over until it's over. That's just how it is when it comes to corrections. You just don't know it's over until it's over, really. So even right here, like I said, we've got mains and alternatives where it could bring us higher or we could not go higher. We just don't know yet because that's that's the curse of corrections. You just don't know until they're over. And that's why I like to trade conservatively and not greedy. But from my perspective, the main point here is that just losing the 832 and 886 isn't indicative of price reaching new extremes or pushing past those pivots that it previously made. So just take those things in consideration, but don't think of it as like an ultimate like, oh hell, this thing's gonna go down. This thing's going. Any other questions? Like I said, I'm willing to. I got some extra time here, and I want to spend at least like another 15 or 20 minutes or so because I definitely feel bad with the start of the stream. I'm happy we were able to fix the issue, and I definitely appreciate everyone's patience. But I do apologize about that. Otherwise, I mean, I will at least try to answer at least a few more questions if some pop up. But I'll at least go over what I'm looking for as a trader. So, as an alley wave trader, we've gone over the counts, we've gone over our reasoning, our validations, our thought process, and why. But as a trader, how does that help us, right? We've gone over multiple things. We've gone over directional confluence. Um, you know, we've gone over wave count confluence. There's different things that we have, and even on other assets, we're expecting a bounce up. But in terms of helping you right now, I'm gonna look for this structure right here, essentially. And like I said, it depends on how this is developing. I'm not gonna enter my long yet. I'm very close to, but what I really want to see is price fulfill this order block, this 4 hour order block, and pivot off of this. It can come down. I mean, wouldn't mind if it came down the zone because we do have a naked level there. So conservatively, what I'm looking for is basically this. I'm gonna be looking for the structure to kind of start to impulse down. I'm gonna look for a five-way structure down essentially. I'm gonna look for this to be a one, two, three, four, five. Well, not that deep actually, but one, two, three, four, five. Or if it is a one, two, it rips a little bit. Four, five. I'm going to be looking for an entry in these zones once I see a good subwave 5 structure forming right here, because it's going to signal me that we are potentially seeing the end of this fifth of a fifth into a one potentially, or even an A, or I mean this could be the end of the expanded flat for our X, but I am expecting some type of five-way substructure to fulfill this order block, pivot off of this area, and what we're going to do here essentially is try to trade this A wave. If you're conservative and you can send a trade and you don't mind, you can try to just sit through the B and the choppiness. I tend not to. I tend to try to trade the A leg, also trade the B, and trade the C leg as well. But your main concern here would be to take this trade and then same thing. Just like how we're looking for a five-way substructure, we're going to look for a clean 5-3-5 subway structure right here, or a three-wave substructure. It could be a 3-3-5. It could be a 3-3-3-3-3. Actually, no, it can't be that. It's a two. So either has to be a 3-3-5, or a 5-3-5. But overall, a three-wave structure. we're going to look for a higher time frame three wave structure, and then we're going to look for this subwave one, two, three, four, five. Try to get it out here. Look for a one or an A, B, C, and then try to get in right here and get a one, two, three, four, five. Once we see a nice five, three, five, we're going to be doing the same thing. We're going to be looking for a short. This one's going to be tricky though. This one's going to be a little more tricky personally, but we're going to be looking for the structure to end here at this point and start take this one down. And I might even turn this one to a nice swing one. Just depends on how big of that bounce up we get, right? It really does. But in terms of trading, you've got multiple trading opportunities here. So I mean, you've got just one right here. I mean, multiple actually within this A leg. You could take these extensions multiple times. You could get ready to take this one. You could take this short for this B leg down. You could take a long up for the C leg right here. This is where I wouldn't get too greedy, you know. This is where you would plan conservatively at this point. You can get greedy right here, and it won't hurt you that much in the long run because we'll be expecting a correction and then a continuation. But in the second extension, you don't really want to get too greedy. And in terms of actual entries and targets and stuff like that too, I'm gonna be charting this in real time. So I mean, I'm gonna have wave counts. I'm gonna have targets. We're gonna use multiple areas of confluence. I mean, we'll look at weekly levels. We've got naked levels here, even the developing ones that are forming on the weekly and the monthly. I mean, we're gonna have a lot of targets, and I'll be charting this in real time and posting my counts in real time and helping out with the entries too. So I mean, if you're interested, it's all gonna be there in the server within our Ellie Wave discussion. So and honestly, I'm active there all the time. So if you ever have any questions and you just don't want to answer them right now or have any questions in the future, just ping me. I mean, I don't really respond to direct messages too much, but within the server itself, if you ask me a question, I respond almost same day. I usually almost respond same hour sometimes. But that's kind of what I really wanted to go over. We've justified our accounts, we've gone over trade setups. But if anybody has have any quick questions here, I definitely want to at least answer one or two questions. Just taking a look at the chat here. Give me a second. Do I have anything at 19,580? Uh, really, just this naked level. To be honest, I think that's all I really have. This naked daily level. We might have some liquidity around here somewhere. No, I don't think we do. Yeah, no, I really don't actually. Nope, just a naked daily level. If you're bullish on Bitcoin, would you rather buy Bitcoin or a stock like coin? Uh, I think that really just depends on your actual perspective as a trader. I mean, are you a position holder? If you're a position holder, I mean, I think you would recognize just like everyone else here, or most people, that's as a position holder that we're approaching what we call a generational bottom, where we don't really see these bottoms for a cycle or so, like 10 years or 5 years or what have you not. It's that's why it's called a generational bottom. So you're going to look at things that are going to give you the most reward, right? But you want to plan conservative because the more risk, yes, the higher the reward, but it's also the higher the risk. I mean, that's just it. I mean, crypto is just risk as itself. It's not risk averse at all, but I guess it just depends on your capital as one, and two as a trader. Are you a position trader? Are you a swing trader or a scalper, or do you like to mix it up? But personally, me, I would be more looking at Bitcoin. I do buy stock, but I mean, I'm not as heavy into stock as I was. I really like trading crypto more nowadays. If I have a count on Apple, I don't, but I can. I can actually, I can do a count on it for sure. I've looked at it a few times. I've just never really actually done a count on it. But I do want to start doing some polls. So if anybody and doing some weekly counts, like people can start polling what count or what asset they want to see for every week, and I'll do a new asset every week, or we can even deep dive onto it in a weekly stream. So yeah, I'll definitely throw Apple on my list, and if anybody wants some others, they can definitely start. I can definitely start a list I can work on. Other than that, any other questions like relating to Elliott wave per se? I want to try to keep it more constrained to Elliott wave. However, I'm definitely open to answering any and all questions for sure. But let's just do one more question here. If anybody has one more question related to Elliott wave per se. Let's see. That's it for now. How long did it take you to master Elliott wave? Oh, I'm not a master, that's for sure. We're always learning, and difficult thing about Elliott wave is there's a lot of ways you can learn it. And what I mean by that is there's a lot of incorrect ways and a lot of correct ways. And there's a lot of even different versions of Elliott waves, like Neo Wave or Glenn Neely's version. There's a lot of different ways you can learn it. But actually learning it so well, I would say it would come down to being a purist. Like I stick to the rules hardcore. I really am a purist when it comes to Elliott wave rules. I don't bend the rules. I'm a real purist to them. I stick to Frost and Pretcher's kind of like their work is like the Bible essentially. It's the LA Bible, and honestly, just application, just tons and tons of application. I mean, I do chart like 20 different assets, and I'm constantly keeping up with them. But application and actual trading too. Like I'm not just counting just to count. Like I'm also trading this too. Like I use this for my swing trading. I'm more of a swing trader, but application is huge, and also just knowledge. You really have to be aware of all the different guidelines and rules and stick to those guidelines and rules and then apply them, just like anything in life, right? Having the knowledge and just continuing to apply it. But other than that, next time I want to try to focus on keeping more things localized, like stay within the more local price action, and go over like actual live trading too sometimes, or local price action, instead of doing broader overviews, because I feel like we did a great broad overview of the reasons of why we have a main and alternative count, and then moving forward we'll spend more time on local price action, like the recent price action in the recent few days, and the daily price action that's forming on that day, and then even use time to go over other multiple assets instead of just spending time on the big three like Bitcoin, Ethereum, and the stocks like Nasdaq and stuff like that. So moving forward, definitely going to try to keep it fresh, like spice it up and do a variety and maybe do different assets. But yeah, we're definitely going to keep an eye on the big boys like Bitcoin and Ethereum and S&P and stuff like that. And if anyone has any suggestions, just let me know. But yeah, I once again I appreciate everyone's patience. I'm so sorry about what happened earlier, and I hope everyone did learn something or was able to absorb something from this. And feel free to come, chat with me in an Ellie Wave discussion. I'm always in there all the time, sharing my ideas, and feel free to share your ideas too. But regardless, I hope you guys have a great day, and thanks for joining.